the 5th of December. Just going to crack on then with the morning briefing, and just as I speak, you see the DAX, another break to the upside, quite another aggressive move here. You can see on my chart I've got marked up that previous high seen on the 30th. A bit of hesitation around that in the last 5 to 10 minutes, but now another breakthrough, so snap higher. Again, looking at these assets and where we're priced at the moment, I mean, we're going to talk about this reaction because it's been overtly positive, which has confused a lot of people in the market this morning. Gold as well, just keeping an eye there on the downside. It had a test of that low print that was seen at the end of last week. You can see on that wick, on that spike, and it's just having another look now, that 1168 spot 4. The one thing I'd say with the reactions that we're seeing here, I'd say the DAX, I would be a little less inclined to be looking at this point, given how highly volatile it is. But the euro, I think it looks a little bit more interesting around these levels at pivot. Also, bunds. With the DAX, I think trying to pick a short at this point is like stepping in front of a bit of a locomotive, if you like. You'd be a braver man than I think. But okay, so let's have a look at what exactly has happened. Obviously, being an analyst, people looking my way for some sort of clarity and hand-holding to guide you through why the market's reacted. And in typical analyst fashion, I'll try to explain a few reasons that might be behind some of the moves. But ultimately, I don't want to be trying to pick through this in what has been overall an absolutely incredible reaction. That's probably why it's been quite aggressively positive, because everyone was obviously positioned the other way round in this type of uncertainty as it was to unfold like it has done, with Renzi losing last night by a large margin, larger than certainly the polls were indicating before the blackout period. It was still leaning the way of no, but only slightly. If you round the figures up, essentially it was 60% versus 40% in favour of rejecting the reforms. That was much bigger than a lot of people had initially thought. So hence, I think, the reaction to this, I think looking at the euro overnight, I can just imagine people trading this overnight. I'm looking at it now. That initial, you would have been here 11 o'clock when the futures opened. You would have already had that initial. I saw quite a few things on Twitter last night before then talking about exit polls, and it was a much bigger to the no, which ultimately turned out to be true. So you would have seen that gap down, and I imagine people would have just been shorting it. Then got really caught up in some of this messy price action. Then actually, when you got confirmation and resignation, the euro weakened again. These are the lowest points since 2015. And then when the market in Asia started to recover, and then since Europe's come in this morning, it's really blown it out the water in terms of reversal, completely closing the gap on some of the Friday's price action. Exactly what's happened really in the other products as well. You can see in DAX, from cash open, the Italian banks initially opened down around 5%. Haven't really seen too much in the way of how they're responding at the moment, but I would imagine they're getting dragged up with a lot of this other price action that's occurring at the moment. But gold, as I've been speaking then, another blast lower here, going through that low we were just looking at a few moments ago. So you can see there another quick $5 run lower in the last few minutes. So let's have a quick look at some of the major points. So Renzi hand in his resignation. Who could succeed Renzi? Well, potential successors include allies such as Finance Minister Carlo Padoan, who I understand has cancelled meetings to come back to Italy. The Senate Speaker Grasso, Culture Minister Franceschini. Renzi will remain nominally in power until a new Prime Minister has been sworn in, so it's kind of the same situation with those 100 days with Obama and the President-elect Trump. So no real power, just sitting in place to wait to see and help facilitate the government now a succession going forward. Stability is the main key here. The president will want to act quickly, because the longer there is, let's say, political uncertainty, the greater the propensity is for the market to get increasingly nervous. So a caretaker administration will need to be put in place as quickly as possible. What do Renzi's rivals want? Well, the anti-establishment five-star movement wanted Renzi to quit. That's now happened. They'll be pushing for immediate elections, because actually if that were to be the case, and we'll look at this shortly, then that would be very much them encapsulating some of this renewed populist sentiment to their advantage. Taking a quick look then at this, and I'll keep my charts in focus so we can see any other price movement if it occurs, but a couple of points that Deutsche Bank are looking at. And actually looking at some of the points, the low likelihood, high impact scenario would be an immediate early reaction. The large margin of victory of no may have increased the probability, but Deutsche only assigned around a 30%. There was around 20% before they saw the gap in this latest result of actually a snap election happening. So they'd expect the president, Mattarella, to act quickly, assuming Renzi resigns, which is going to happen. The new government, supported by broadly the same majority behind Renzi's cabinet, could be in place by next week. So that's that kind of time frame that we're looking at. Overall, Deutsche is saying that they think the Italian equity market could initially drop 5 to 10%, led by financial as well. That might have been true right at the open. But they're already recovering with some of this renewed risk appetite. The referendum outcome, the no wins, Renzi resigns. Well, as a consequence, Renzi's Senate reform has been rejected, but possibly more important, Deutsche think that the margin of defeat suggests that populist parties could perform strongly at the next election. Now, this is when we get on to some key points. So based on the current opinion polls, the five-star movement would be favourite to win the majority premium at the lower house if the election takes place with the current two-round system. But even if the five-star movement manages to win the lower house, it would have to secure the confidence vote of a Senate elected with a proportional system. So political fragmentation would likely lead to political impasse, and the five-star movement would need to support or find support from other parties, despite its long-standing unwillingness to form coalitions. So they've always, in the history of their party, been very reluctant to form coalitions, and they would need that, irrespective of the fact that they'd be able to gain more political sway, let's say, with how the land lies now post this referendum. So actually, the likelihood of a snap election happening in Italy is still relatively low, and that is a market positive because it averts the worst case scenario, which would be an outright the five-star movement, which would be Eurosceptic and would lead to this kind of probably following the chain down a call for a referendum then on Italy's place within Europe, which is obviously going to cause the most adverse reaction in the market. Other things are that the ECB, maybe the comments, that source document in which they published around midweek last week has had some effect as well, potentially, on how the markets reacted this morning, and in that they were suggesting that they would step in an interim period if Italian yields were to spike, then they would step in and start buying BTP specifically. I would imagine that's probably happened right from the off this morning, and that may have as well contained some of the reaction. Thirdly, I think the market, the polls were actually leaning before the blackout period, as I said, towards a no vote. So how much of this was actually in line with expectations? Although the margin was bigger than expected, certainly the polls called it right on the leaning of the bias that the vote would go no. So maybe as well the market has become slightly more desensitized to these events happening with Trump and obviously Brexit and so on and so forth, with this populist phenomenon being more globally based. And then the fourth thing, although I think it's much smaller event overall, but at the weekend you did have Austrian presidential election where the Green Party backed independent candidate Van der Bellen came out on top versus the far right Freedom Party candidate. So it was one of the first times where the populist movement didn't win in Austria, and that margin was actually a little bit wider than expected as well. It was around 53.3% to 46.7%. And so a couple of things then I think you can look at. As I said, I think this overall, this reaction is very unexpected. But for those reasons just mentioned, there's a couple of things that you can look at to explain some of this. Now, I do not think that this reaction will last. I mean, you want me to give a view, then that's my view. I would say though, the instrument that I'd be looking at is not the DAX. That's just the way that that's moving this morning from a momentum perspective. I would be much more cautious on that particular asset class. But I would say the euro, with this move that we've seen and pivot holding, that definitely looks more of interest here. Certainly the highs may be up at the R1, which kind of looks at the high from the end of last week. If this pivot were to go, I think that then this move looks a little exhausted for the actual news flow that's taken place. Looking technically, quite interestingly though, the euro, this is much longer term. That level, I mean, overnight we touched lows down close to 105, but overall we're still in play from those real key support levels that held in 2015, both early and late 2015. We've still not broken that yet, and so not expecting a dramatic sell-off either in the euro currency. If these levels had been taken out overnight, then we could be looking at a completely different ball game. Maybe the fact that didn't get broken as well was a bit of a net or positive sentiment, because it's such a strong level, and a lot of overnight traders would have been looking at euro for sentiment direction for other assets as well. But I think this move in the euro is starting to look a little toppy now, in my opinion. And these initial snap reactions in relation to actually what has now got to happen to Italy, I don't think that these moves will last personally over the coming days, certainly. Actually, one of the big things I think that could be a net negative and prompt maybe a bit of a reversal to some of the positive moves is the fact that you've got an Italian bank meeting coming up at 11 a.m. this morning. Now, this is really important for these Italian banks because they already are in a very negative state given the large proportion of bad loans on their books and the fact that they're right in the middle of a recapitalization phase. So Monte de Paschi is the key one. MPS and advisors JP Morgan, Mediobanca will meet today. As I say, this is 11 o'clock as to what I'm being told, to decide whether to pull a plan to go ahead with the €5 billion recapitalisation according to people informed on the plan. If the plug gets pulled on that, then this takes a bit more of a negative twist to what's happened overnight. Senior bankers will decide whether to pursue their underwriting commitments or exercise their right to drop the transaction because of adverse market conditions. In the event that banks drop the capital plan, the Italian state is expected to nationalise the bank. But these things obviously take some time to be put in place in the interim period. That usually results in downside bias for Italian banks, which are hypersensitive to this type of news flow. So certainly be keeping an eye on that. That's going to come in around 2 hours' time. The Austrian situation, we've already discussed that. So the elect of a Green Party-backed economics professor as their new president against the anti-immigration nationalist. But moving on, a couple of other things that I want to look at. And we'll be talking about the Italian situation as the research starts to come in to provide and shed some more light on what people's thoughts are. But moving on, there are a few other things to be looking out for this week. And one thing I just wanted to briefly mention was that this week actually sees the UK Supreme Court meeting over Article 50. So this is concerning the High Court decision roughly a month ago that ruled against Theresa May's government in a judicial review brought to prevent triggering Article 50 without parliamentary vote. Obviously, this all acted as a sterling positive at the time in regards to softening the government's existing hard Brexit stance. The hearing starts today at 11 a.m. GMT, but bear in mind it continues throughout the week and concludes with the last hearing scheduled to finish at 4 p.m. on Thursday. I would say that as we get through into Wednesday, Thursday, you might start to get some rumour or leaks coming out in regards to how the land lies with what that ruling or where the way it might go as we get closer to that 4 p.m. deadline, let's say, when that last hearing should conclude on Thursday. Now, I'd say, though, that most common belief is that the Supreme Court is highly unlikely to go against the ruling of the UK High Court. That being said, then, if the market is positioned for that fact, if the Supreme Court were to back the government, there's quite a long way for the pound to fall in order to retrace the kind of what was one of the main catalysts for some of the more recent upside that we've had in sterling. And obviously, if you look at it, we're way up there in reversal of some of that movement that was seen. We're pretty much at the... I'm looking at... Let me just flick my charts over. This is the cable chart. And this is where hard Brexit was first sounded. And this is where now at the moment we're trading. So it's pretty much full reversal of that move. So if the UK Supreme Court goes against market expectations, and in this political environment where that continues to happen, then what's to say that we don't have another dramatic fall to the downside? So certainly that is something that will be key for sterling traders through the week. A quick look at one of the other big events that's going to be happening this week, and that is, of course, Mr. Draghi and the ECB. This might take on a bit of a renewed interest in the wake of the Italian situation. If they are buying BTPs, there's going to be questions coming his way. One of the interesting things, though, I think, with this particular ECB announcement is that people are talking about tapering already. So even though the ECB are talking about extending their QE program for an additional 6 months, that's the median consensus, at the current pace of 80 billion euros a month, actually people are looking at this is pretty much the last kind of twist in the road for the fate of QE going forward. And economists have started to bring forward their projections of when the ECB will start winding down their purchases. You can see here it's December now, Q3 of 2017 from previous Q4 of 2017. So they've brought forward basically a quarter. So it looks like this extension will be the last in terms of what common thinking is at the moment. In terms of what will come next from the ECB, 89% of the 53 economists surveyed expect a fresh stimulus or QE change at this meeting. So the overwhelming majority are expecting that to happen. The most logical being an extension of QE at the current pace. So again, this is the December meeting here. The probability there, very high that occurring. Changing of the rules, because obviously if they're continuing at such a large volume of purchases per month, they would need to make a parameter change on the composition of how their purchases are made within the program. And the most logical, according to analysts, is increasing the issuer limit, lesser extent removal of deposit floor, abandoning the capital key, which arguably could be the most powerful, actually is seen as the most lowest probability. I would say that's unlikely to happen because that's kind of the measure of last resort as far as that program is concerned. So certainly the ECB is going to be of interest. That's on Thursday. And looking at bunds this morning, bunds have moved lower. You would think that given the Italy situation, bunds should be higher in a flight to quality. But I think bunds are lower for two reasons. One, the strength in the equity market has forced this price down after initial gap higher. But two, the actual QE extension and more importantly the parameter change is likely to be negative for core European bonds but positive for the periphery. And that's probably what exactly the ECB will want to do, is going through now this political uncertainty in Italy, they'll want to make it more favourable for the peripheral nations in buying of their debt, and that's going to be net negative for the core Eurozone bonds, i.e. the benchmark being bunds, which you've seen on any parameter kind of murmuring of a tweak, generally speaking, is a negative for bund futures. Just seeing actually a Reuters headline coming down now as I'm speaking, ECB has not been seen in the market buying Italian government bonds this morning. So that's just come out now. So it'd be interested to see then how the market starts to react if that adds as a negative headline the fact that they've not stepped in. Otherwise, just concluding other things that we have seen. You've had Chinese data come out overnight. I would say this is complete backseat to the European things that have happened. The Kaizen Service PMI reported rising 0.7 points to 53.1 in November. It was actually the highest level since July of 2015. So actually pretty strong for that services PMI. But it was a weaker manufacturing reading overnight in China. Going through the morning, you've got the various services PMIs coming out of Europe, but these are final readings, so not that important. But the UK one will be. That's at 9:30, given it's the largest portion makeup of our GDP. So keep an eye out for that for sterling traders. Later on this afternoon, you've got ISM non-manufacturing, but I would say that just given the context of payrolls and how baked in December hike is on the 14th, that really that data is insignificant to some respects. But we're looking at these comments. Now this is an important thing because we start to go into the blackout period for the Fed later this week. That means that the Fed officials cannot speak 7 days ahead of a meeting. Their meeting starts on the 13th, the announcement on the 14th, and then they can't speak 24 hours after. So it means that you're likely to get a front loading of Fed commentary ahead of that in order for them to communicate to the market what exactly it is their intentions are on the 14th. So keep an eye out. They're likely to be quite influential comments to cement the thinking of the rate trajectory for 2017 when those new summary of economic projections comes out on the 14th. So you've got Dudley at 1:30, Evans at 2:25, and Bullard speaking at 7:05. Remember, it's always important what the topic is that they're talking about, and this kind of solidifies my thinking that these comments will be important for gauging that future expectation, because if you look at the three Fed speakers, if I just flick my chart, all three are speaking on monetary policy and the economy. So this is all exactly Fed planning, post payrolls, ahead of the blackout period, to communicate effectively what their intentions are so the market can position itself accordingly. So these comments will definitely be more, I would say, potentially market moving than actually the data coming out from the US this afternoon. Finally, a quick look. There is an image I wanted to share with you this morning about, which is this chart. Obviously, we're working our way through the political kind of minefield at the moment, so you can strike out the three on the left. So the primaries in France really has meant that Hollande has now fallen by the wayside. The Italian referendum has led to, at this present point, Renzi's resignation. The Austrian presidential election has gone against the populist movement. Next up, end of 2016, target Greek debt restructuring. I would say this is probably lesser on the political agenda, but certainly something to look at. And then we start heading into the French situation. The socialist primaries, I would say, are not really important, because likelihood is it will be a final run race between the centre-right and the far-right in regards to Fillon and Le Pen. In the interim period, obviously, we're monitoring the situation with the Supreme High Court ruling. This leads us then into UK triggering Article 50 towards the end of March 2017. You've then got Dutch elections, German state elections, the French election, and it goes on and on. So there's even the Catalonia planning their independence referendum, and then you've got later on in the year the federal elections in Germany. So certainly politics still right at the forefront of driving these price movements at the moment. But taking a look at these charts at the moment, as I said, I think that this move has been potentially a little overdone, in my view. As I say, the DAX though, I think is a little bit of a beast this morning. I think the euro here on a short, on an overextension of the move looks more interesting in my eyes. But I'm going to let you get on with the session. Obviously, as I get more insights into people's views about what's happened, I'll continue to provide them in the chat room. So just keep your ears peeled and the comments going into the chat. But enjoy the session. Thank you.